Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
All right, everybody, the first trade podcast for 2026. When it comes to copper, I've got a guy that you should know if you listen to this podcast. His name is Aldo Jordan, and he is the owner of Metals Agency, and he trades a fair amount of copper. So I figured if we're going to do this thing right and we're going to do it justice once a month, let's get someone in here that's A, smarter than me, and B, knows the market. And let's talk copper, man. How you doing, Aldo? I see you wearing the Chicago Bears hat, sporting. You guys got a W this weekend.
We got it done, and we'll take the odds going forward. And in Chicago, it feels like we won the Super Bowl. So no matter what happens from now on, we really don't care. We beat the Packers.
There's a lot of hatred for the Packers there, huh?
Not hatred, but I think we're having a pretty good year. We're going to celebrate it every day. Why not?
Yes, as you should. So it'll be interesting to see how you guys play this weekend. But,
yes.
At the end of the day, I mean, a win's a win. A playoff win they're pretty hard to come by. So you take them and enjoy them.
Yeah, for sure.
So speaking of playoff wins and speaking of big wins, I mean, copper going past $6. I mean, what, it hit 609, 610 or something at one point last week or the week before last? It's crazy. What's going on out there? What's driving this? What's pushing copper all over the map?
Well, just to kind of frame it, right? So copper on 2025, the average for the year, we ended up roughly at 480. So even the average today, year today, which is only a couple of trading days, but is $5.80. So we're up 26% for the year compared to last year. But yeah, I mean, to your point, January 6th, I think we have an intraday of $6.09 on the high. It's set around 606 and essentially took it all away the next day.
Yeah. Easy come, easy go,
Easy come, easy go. So yeah, we were at 580 the next day. And quite frankly, I think that a lot of the drivers is still a lot of financial speculation. Quite frankly, my point of view, these news about mines, strikes, and everything, that always have been there, and those things tend to resolve themselves rather quickly. Mining companies have, a lot of contingency plans for that kind of stuff. They know these things well in advance. So we continue to see, financial institutions trade 70, 80, some days 90% of the COMEX contracts that are being opened and closed. None of them are taking financial possession of the scrap or the metal itself. So that's really what's driving this is the financial component to it. Unfortunately, we're just to a certain amount of trading spectators on the market. Because when financial institutions are doing 80% of the trade, physical traders are left with 20% and very little leverage that they pull on the intraday changes.
And so how much of this, you read about it in the news, how much of this, when it comes to silver, right? Silver has been on a hellacious tear the last couple of months. And they're saying that essentially futures contracts were getting called. They're now having to come up with physical inventory to put in the warehouse. And that was what was driving the price, because they were having a difficult time coming up with all the physical silver required, right? I mean, the way I understand this, and this is just my interpretation, how much of that is similar to the copper market? I mean, is there any of that it's causing? Is it strictly just guys behind a computer pushing buttons and driving this market up? I mean, with just future contract speculation, how much of it's cathode driven and China driven? And I mean, are we left to believe that it's just all speculation driven?
It's not all of it, but certainly the vast majority of it. Uh, we have an overhang on cattle in the United States. They're still trying to kind of work itself out. But we have been with that cattle overhang since July, August of last year. So there's no news in there. No new wave of cattle has hit the shores of the United States like it did mid last year. So yeah, there's a lot of financial institutions, and when you say the guy, unfortunately, the guy tends to have a lot of millions in his pocket in huge leverage positions, and they're financial institutions that are seeing most of these crazy trades as an opportunity to really work the daily arbitrage. Um,
Uh-huh.
so that we're seeing one day $6.09, the other day 5.80. Really, there's no mining or restriction on supply news that is really driving that.
So how have the spreads adjusted on your end? Like, let's say the number one copper, the number two copper, the bright. I mean, are you seeing the spreads widen out as fast as they were last year when we kind of really dove into this? When you were saying, "Oh man, they're moving everybody to the LME because the COMEX, contracts but you're now seeing the LME and the COMEX are not quite neck and neck, but they're pretty dang close now, relatively speaking. Where before there was like a dollar or sometimes an 80 cent arbitrage
Yeah,
difference, right? Now maybe a dime,
yeah,
or give or take.
yeah. I mean, for all intents and purposes, the arbitrage has become just about zero. And that little bit that is in there is essentially the value of the dollar going up or down.
Hmm.
That's a really good point. Now, the big difference between COMEX and LME is right that most LME traders actually have to take position of the physical copper on any given warehouse. COMEX doesn't have to do that. Yes, there are warehouses in COMEX, but it's more of a financial instrument. To answer your question, the spreads definitely widen. My consumer for Europe, we had to adjust as we saw the LME rising,
Hmm.
not only from a commercial standpoint, but from a hedging standpoint as well, because we can't leave essentially a hedge open out there into the future without adjusting our buy. Last week was very difficult to pinpoint where the market ought to be, with most participants essentially, I would say, saying, you know what, let's talk next week.
Yeah, yeah.
And sometimes from a consumer standpoint, right, which we are technically, most of our function is that we buy between low side 1,500, 2,000, maybe 3,000 metric tons a month. Sometimes you just gotta say, you know what, I don't know fairly where this ought to be today, so I'm gonna retreat from the market. And here's my guidance, and I'll come back next 2 days or next week.
Yeah.
And it's painful for the supplier, but sometimes that's really the best course of action from a consumer standpoint.
Yeah, are you seeing that? Are you seeing more and more people pulling out? I mean, is it harder to place copper material today, or is it not? I mean, or is it just you can place it, you just got to be willing to digest big spreads, or both?
Last week was very hard to place copper, and if you got a sale, you were happy that you had some liquidity in a sale. I think that most people were trying to find some kind of footing on the liquidity side to be able to actually buy against something, which always helps from a retail standpoint. Otherwise, you just don't know.
Yeah.
Uh, so it definitely was a yes. It was hard to place copper last week, and most people were trying to find the baseline for the market. I think that didn't materialize so much last week, and I would say that the spreads were literally all over the place.
So what's a typical, like, give me a range, like when you're looking at spreads for your number one copper, like domestically, or even exports fine. You just kind of give me some ideas of what people could probably be expecting out there for a good China grade number two, for a good clean number one domestic. I mean, are we what are you seeing out there?
And this pricing is range almost to the end, more tilt to the end consumer pricing, kind of final pricing, right? Very bright, I
Yeah.
would say. This week, people were looking between 35 and 40 cents under. Number one, most took place between 40 and 50. And I think that the widest change was probably on number two because a lot of people were trying to place that package, as wide as narrow as 50 and as wide as 60 for some
Mhm.
guys out of March Comex last week, mainly.
Yeah.
Uh, that's more towards the end consumer kind of pricing.
And like, and for the record, like that's a full load of a truckload of number one. That's a
Yes.
truckload of bright wire. That's a truckload of number two, and or a container, I guess, call it with 44,000 or better. Right,
Yeah.
right. I mean, so like when you're looking at say a 70 cent spread or an 80 cent spread, you've got and you're because you're moving say mixed loads or whatever, just know that there's some money being put in there for the mixed loads. So when you're and that's somebody the shipping it is still a decent amount of material. And so if you're on the buy side over there in a recycling center or whatever, and you got people complain, oh, copper should be $6 or it's 5.80. Like, yeah, but there's probably $1 or better, just in packaging, shipping, plus the spread that's out there and cash flow considerations. I mean, it starts to widen out pretty good, but still, I mean, if you're paying $4 and whatever cents a pound for any grade of copper, that adds up really quick on the cash flow side as a
Oh,
buyer,
oh yeah. I mean, just think about it, right? I mean, the from 25 to 26, we're at $1 up on pricing. So that's another $40,000 worth of financing and cash flow on one load of copper. And there's that's it. The margins didn't go up 25%. The spreads didn't go up 25%.
Yeah.
Nothing went up 25% that anybody keeps. Is just the intrinsic valuation. Now it costs $40,000 more to finance it. Is getting very, very costly to maintain that cash flow and inventory levels. And of course, most guys, rightfully so, are going to have to widen those spreads to be able to compensate for all of that. Because it's at $6 a pound now. We're talking about literally $250,000 on a load of container. It used to be
Yeah.
180,000 last year.
Yeah. And before that, it might have been 100. You know what I mean? Like I think that's moved up very quickly. And if you're not in a cash position to support that and be able to, and like you said, if for the people that did have a good home or a place to go with their material, think about all the people that don't, right? They're like, okay, now I got to sit on this. I bought 40,000 pounds of copper last week or whatever the case may be. Like that's a game changer for your business, so you just got to be aware and you got to keep that stuff moved, make sure you have good outlets for it, don't overcommit, and because fat cash flow is king in this business.
Yeah, yeah, absolutely. And I mean, and you know it better once you start spreading out into several different yards and retail business and all of that. Uh, for the smaller operator today, I mean, the key is to get it in and get it out, man.
Yeah.
There is very little to be gained on trying to time the market, speculate the market. And it's getting more expensive to be able to even hold that inventory. Period. Uh,
Hmm.
forget about the ups and downs of the market every day. Just holding the inventory. Period. If somebody has 3 loads of copper or 4 loads of copper in the warehouse and is taking them 40 days to do inventory turns, that's 40 days of financing that you had to embed into your margins to be able to even just buy and sell copper.
Yeah. Do you see, I mean, or do you think that more people start to hedge as the pricing climbs like this? Are there more businesses that you think hedge? And I say that loosely just because not every scrap metal recycling business is probably hedging, right? Like, and I say not every, but I'm sure most aren't. there's, I bet the percentage of people that are hedging is probably, if I had to guess, 10, 15, 20% of the actual recycling companies, maybe on a company basis, not on the volume basis, but on a company basis, like a percentage, I would say it's less than you would probably anticipate. Do you think
Yeah,
that's fair assessment?
yes, yeah. I think that that's a really good number. Actually, most hedging companies that I talk to, they believe that less than 20% of the companies in the scrap business actually have a hedge book.
Yeah.
Yeah.
If you were a small, medium-sized recycling company, would you run a hedge book, or would you just run it on, get the material in and get it out? Like, what's your take on that?
There comes a side where you actually have to evaluate it, right? There's a financial component, but there's also a manpower component to it. Uh,
Mhm.
that kind of transaction from a financial and logistics standpoint needs a lot of hand holding as well. It does provide some benefits, but it also has an expense as well, right? You're essentially buying insurance, and we all
Yeah.
know that insurance doesn't come cheap. Um, there's no magic number, Brett, but I would say that once somebody starts looking at 5 plus 8 loads of copper a month, is probably a time to just at least evaluate it, what it will take.
Yeah.
Because at that point, really your cash flow, now starts getting into the 2.5 or 1x of that basis
Hmm.
inventory turns. So if somebody's buying 8 loads, you essentially have to finance 12 or plus at $250,000 each. You're talking about roughly $3 million.
Yeah.
Um, and if the market is moving up or down 5% of that every day, 3 million is just
Yeah. Like the big swings. It's big, it's real math, it's real money, it's big swings. And I think that a lot of people kind of get it twisted. They think, oh, well, if the pricing is rising, everything is great. And it, like you said, it doesn't necessarily mean the margins are widening out. It just means it's more cash intense to play the game. And
yeah,
so, you're gonna get, you're gonna have to find out what the best way is for you. If you're cash flush and you feel like you're a cash buyer and you want to sell against the market, you want to time the market or whatever, and you're doing a few loads a month, then hedging may not really be your jam, right? But you start moving a little bit more than that, and you start, if you're in a super competitive area where you're buying tight already, then hedging might be something a person takes a harder look at.
yeah. I mean, those numbers start adding up pretty quickly, right? I mean, 1% of $3 million is $30,000, right?
Yeah.
I mean, just think about that, right? So there's a lot to protect when you start getting to that amount of loads. But again, I mean, there's a lot of infrastructure that has to be in place and a good understanding about inventory and logistics to be able to do it. But yeah, it's something that at some point a lot of people are having to take a second look at it just to see if it fits their needs today or not.
Nice. Well, any parting words for the people out there that are trying to figure out where this copper market's going, what to expect, what they should do? Any wise words of advice for the month of January?
Buy and sell as quickly as you can. That's that's at the end of the day, we still live and die by fundamentals, and you and I have talked about that many times, right? I
Yep.
mean, at the end of the day, buy and sell as quickly as you can, move it as quickly as you can, produce the best quality that you can, and stick with those consumers that are well known and that are able to support your business, when the markets get pretty choppy. Uh, I do anticipate that given where the equity markets are going and as more financial institutions are looking for something else to play with, uh,
Hmm.
we'll continue to have these swings on the market. I think that they're going to become a little bit more of the normal environment that we live on. Uh, and if you were to believe the guys who are very bullish on market, that we could see $6, $7, $8 copper markets down the road. Who knows if that's going to materialize? But if it does, we got to be prepared to be able to protect our position in inventories.
I love it. Well, thank you again, Aldo. Appreciate it. If you guys need any information, any help moving your material, or anything on the logistics side, then by all means, give Aldo and Metals Agency a call and see what they can do to help you out. Appreciate your time, sir.
Appreciate it, man. Take care.
All right, take care.